What's going on, guys? It's Brad here. So this week I wanted to make a quick video to talk about 5 different common tax deductions anybody, and I mean anybody, selling real estate should know. Full disclosure, as all of you know, I am a real estate agent. I am not a CPA, I don't give tax advice, and anything I say on this video should be checked with any of the people you trust in those fields. So the real estate world is a very interesting world. Almost no agents working in it are salaried or W-2. We're all what you would call independent contractors or 1099. Essentially, we don't get a salary of any kind. Any money we make comes in the form of commission check. Which sounds great, right? 100% of the money in that check every time you close one. All right, sounds great. But the problem is none of your taxes are taken out of that automatically for you. You as the agent have to be on top of it. And this is one of the big complexities of being an agent. So the big thing you're going to want to do as a real estate agent is to pay the IRS quarterly. Remember, nothing from your commission check gets taken out for taxes. You have to do that. The Social Security, FICA, Medicare, Medicaid, self-employment tax, guys, this is the big one. That's all on you as the agent. Another thing you're gonna have to keep track of is all of your expenses for the year. And this is what we'll get to here in a minute on the video. So how do you know how much to pay the government? This is a tough question to answer if you're in real estate. The best way that I've tried to do it over the years, go back and look at your previous years and when has the bulk of that money come in. If you're like most agents, the 4 months in May, June, July, and August are typically your busiest time of the year, with the 2 months on the front end and the 2 months on the back end separating those as the second busiest time. Usually November, December, January, February, not so busy, holidays, New Year, whatever. Hopefully you're still doing business then. So then go back, see what you made, see when you made those payments, and then forecast for the next year. And think about how much am I gonna owe in those months. Conversely, if you hit a bump in the road, a bunch of sales fall out, a bunch of people don't call you back, a bunch of people ghost you, happens to all of us, happens to me quite a bit, it's not fun. Then the good news is you may not owe as much on the back end and you may be ahead of schedule there in terms of your tax payments. So here are the 5 biggest things that I pay attention to and you should too as a real estate agent. Keep in mind there's many other ones you can and most likely will use, but here's some of my main ones. Number 1, meals. Anybody, and I mean anybody in real estate, should be out networking non-stop to build a client base. And as such, you're probably gonna be eating a lot of meals with friends, old clients, new connections, whatever. Historically, you can write off 50% of the cost of that meal. Just make sure when you're there, when you get the receipt, you write their name and a little bit about what you talked about with that person at the meal. Number 2, advertising. Whether it's Google Ads, advertising on Facebook, Instagram, taking staging for your new listing, photography, drone stuff, whatever, new business cards, new signs, just about anything, advertising you as a business is 100% write-off, a 100% write-off for a real estate agent. Number 3, Dale Sr., just kidding, education and training. Given how much real estate and how fast real estate is changing, you gotta stay on top of it all. New technologies are rolling out daily, and even as a 34-year-old man, being kind of in that I'm not too young, I'm not too old age range, there's still so much to learn. So whether it's taking a class at Keller Williams, a bold class, whether it's a class, a continuing education class at your local association, or maybe even a class that a lender does for continuing education credit, make sure you're writing all that down and using it as a write-off. Number 4, mileage. You're gonna be driving a lot, and I mean a lot as an agent. And if you aren't, that means you're not doing deals. So you better get on that phone and freaking call people, my friend. And when you're out there driving, keep track of it all. Going to listing appointments, going to closings, picking up closing gifts, coming to see me to learn about the field. You get 56 cents off per mile for every mile driven in the calendar year. So let me give you a quick example. Say you drive 10,000 miles in 1 year at 56 cents per mile. It means you just earned yourself a write-off of $5,600 on your taxes. Number 5, licensing and dues. We all know being in real estate sometimes feels like you are in the mafia. There's always someone trying to extort money out of you. Mainly your association, your office, realtor fees, desk fees, this fee, that fee. It drives me crazy. It's just part of being in it. So if you're gonna be in real estate, keep track of all those fees, and remember, it's a 100% write-off on your taxes. Keep in mind, these are only some of the write-offs you could be using as a real estate agent. So remember, don't just watch this video, call your local professionals, your accountant, your lawyer, anyone else. I don't do any of that. I'm an agent. I just sell places for a living. All of our contact info is in the description here below. Make sure to hit us up for all of your real estate needs, and until next time, I'll see you then.